COVID-19 could spur diaspora bond interest in developing countries. IMF to consider Nigeria's $3.4 billion rapid relief request this week. Nigerian stocks fall to profit-taking while oil prices slow to storage pressure. This is Business Express reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. The coronavirus pandemic and its devastating economic impact on developing countries could fuel fresh interest in so-called diaspora bonds that allow migrants to support their countries of origin. This is coming from experts from the World Bank and other groups. Dilip Rata, the World Bank's lead economist on migration and remittances, say diaspora bonds could generate about $50 billion a year in total for developing countries, potentially helping to offset a sharp drop in foreign direct investment that is slated to fall by 37% this year. The World Bank official at the weekend warned that developing economies could suffer close to a 3% decline in economic output if consumption and investments do not rebound quickly after the coronavirus pandemic. Rata said the World Bank has previously worked with Nigeria and India on diaspora bond issues, and that other countries have expressed interest in recent months as they scramble for resources to fight the virus and mitigate its impact. The International Monetary Fund has said it would meet on April 28 to consider Nigeria's request for $3.4 billion in emergency financing to combat the impact of the coronavirus. Nigeria requested the emergency funding under the fund's rapid financing instruments to meet financial obligations fueled by the coronavirus pandemic and slow oil prices. Finance Minister Zainab Ahmed had weeks ago said the money would allow the government to address additional and urgent balance of payments needs and to direct funds to priority health expenditures. The loan, scheduled to be repaid in a maximum of 5 years, would be the largest allocation yet by the IMF to an African country to assist with the coronavirus pandemic. Online shopping has boomed in Rwanda since the country entered lockdown as a result of coronavirus. Households are ordering essential commodities from home while movement is restricted. Statistics show that online shopping has increased by 60% since the country began lockdown. Here is a report from Rwanda.
It is about 10 o'clock in the morning. We have visited one of the startups that deals in online retail services. We found staff as busy preparing several goods, mainly groceries, for delivery. To the largest extent, the streets are filled with taximotos and taxi cabs, which are moving to and from different suburbs of the capital to deliver goods ordered online. You are right to assume that most of the payments for these services involved are now done digitally. We met Iradukunda Nadine right after receiving merchandise she ordered online. To her, it is a win-win situation for everyone involved.
I
pick my mobile phone and scroll through to order for everything I need from my living room. I don't need to go to the supermarket. Everything I need is available online now, and the prices are good commodity. All items are available online: groceries, restaurants with delivery services, and everything you need. The central bank suspended some of the taxes levied on electronic dealings, and this prompted banks and telecom companies to revoke charges on electronic transactions to avoid human contact. Recently, the Ministry of Trade also listed 9 startups which are authorized to carry out online retail services in Rwanda. Anyone ordering services on these platforms must use digital payment channels. These startups say that embracing e-commerce is the future of Rwanda. However, they are still learning online consumer behavior every day. The surge in online shopping has forced online retail companies to hire more people to offer timely services. Dr. Philip Ndikubwimana, a business professor at the University of Rwanda, says authorities should empower e-commerce, specifically electronic payments, to serve the growing traffic and avoid online fraudsters. This will require the private sector and the government of Rwanda to pay more attention to e-commerce. Most businesses are going to explore electronic transactions and delivery of their services to remain relevant. Mobile money payments and internet banking must be empowered to serve the growing traffic. There are about 9 most popular online retailers in Rwanda. Statistics from the ICT chamber shows that online shopping has increased between 20 to 60% in Rwanda since the country entered into a lockdown.
Back home, people have been exploring ways to survive the pandemic as lockdown in many states have sent a good number of businesses on break for safety reasons. However, what are the strategies for SMEs to survive this phase of life? That is our present normal. Ibrahim Shelling is the MD, Credence Investment Managers Limited, and joins us via Skype to examine the needed strategies to survive in COVID-19. You are welcome to the program if you can hear me. Distancing is now the new normal. So what is the composition of goods and services in the market as it is now?
The Nigerian GDP is mainly service-based. We're looking at about 60% contribution from the service industry. So there's going to be certainly an impact on GDP if service industries are not able to basically look at the situation and find viable alternatives to the current lockdown.
Okay, do you agree with the school of thought that says any business not already online is in trouble?
Well, I would certainly say any serious business prior to the lockdown that doesn't have an online presence is perhaps very limited. So going forward, you would definitely expect that businesses that don't have platforms to reach clients and markets will certainly suffer. However, you look at it from an operational point of view, some businesses simply cannot offer their services online. We look at, for instance, hairdressers. You look at, the hospitality industry. So there are some industries that will certainly be hit and cannot offer their services online. However, they can offer, they can market for customers online.
Okay, what steps do you think should people take in this lockdown season to remain in business? I'm also looking at the Rwandan experience.
Sure. Definitely, the businesses that are going to prosper are going to be the ones that, are still in touch with their customers. You cannot rely on display marketing or having a shop somewhere that, customers will go past. So definitely reliant on reaching out to your customers. Digital marketing platforms are going to be thriving. In fact, the technology industry is perhaps the biggest beneficiary of this lockdown. So definitely an online and digital platform is certainly needed for businesses going forward.
How secure do you see these transactions? There's the issue of security is a concern, if you agree with me.
Definitely. I think that's been one of the major issues in terms of adopting digital platforms. However, I believe in terms of, for instance, payment platforms, Nigeria has one of the most secure and actually robust payment platforms in the world. So definitely it's more a case of, we have some people that perhaps are not as educated in the use of digital platforms and make themselves susceptible to online fraudsters. However, certainly, it is the way forward. And any business that wants to thrive has to start adopting these kind of technologies.
Yes. Okay. For instance, I get to make order online and delivery is supposed to be made. Yes, I understand government at all levels is trying to ensure that essential commodities have free passage. What more do you think can be done to ensure that this process or this system works effectively?
Well, certainly we have to have a more robust payment system. All right. With the banking system, it may be a little bit should I say, disenfranchising for some that might not have the requirements to perhaps open a bank account. So we have to look for alternative methods. We have the likes of M-Pesa in the eastern parts of Africa, which has been very successful. We certainly need to adopt those kind of technologies in Nigeria as well. As I said, because a lot of people are not able to get onto the financial services industry simply because of what they call KYC requirements, or not being able to meet up with KYC requirements.
Okay, taking a look at local production with the restriction that is ongoing now, what do you see in the long and short term for us?
Well, certainly there's going to be an impact. In the short term, we are an import-dependent country, and a lot of our production is reliant on importing goods, especially China. So definitely there's going to be an impact in the short term. I think in the long term, it might even be favorable in the fact that we might start sourcing for, local materials, which will definitely help the economy. So definitely we're envisioning a short-term slowdown in production, which is what we've seen globally anyway. But certainly there's going to be some shortages in terms of materials for production.
Okay, how about the rural player? How can such a class stay along the food chain, leverage on technology at this time to actually remain in business?
Okay, I think again, so this is one of the things that we have to look at, because if we cannot import, we already have a deficit in terms of our meeting up with our food requirements. So we would definitely be looking for local, local produce. Now, you would not necessarily imagine that the local farmer has a smartphone, although now smartphones are everywhere. However, what you could look at are, local networks, perhaps using USSD channels to receive payments, and also for marketing of goods. They'll definitely require some sort of local farming network. If not existing, then definitely needs to be developed to be able to get produce to the market as effectively and efficiently as possible.
Okay, what will be your post-COVID-19 forecasts following the situation that we're in and the experiences we're going through?
Okay, well, definitely in the short term, there's going to be, there's going to be some severe shocks. We've already seen the issue of the oil prices, globally that have, decimated economies, and we are certainly going to be largely affected. I envisage probably, a short-term spike in terms of inflationary figures. We're going to see cost push inflation, food inflation in the short term. Before perhaps we're able to, meet up with production. So certainly in the short run, it's going to be, high inflationary figures before we actually peak out and perhaps level out once production picks up at the tail end of the year, perhaps.
So in the overall, would you say we are not doing badly in terms of moving the physical market to the virtual space?
No, well, definitely, I think there's a lot more to do. What we are banking on right now is the reserves that we've probably been saving prior to this time. Now, you can imagine, farmers might not have been able to get to market. They might not have been able to access input materials. So you definitely see that effect in terms of, production outputs, perhaps, 1-2 months down the line. So that's why I'm saying we really need to accelerate, everything we're doing now. I don't think we have necessarily a master plan to address some of the issues that we're going to confront post-COVID.
So that's to say it's a wake-up call for all stakeholders involved. Thank you very much, Mr. Ibrahim Shelling, for sharing your thoughts with us. As things continue to unfold, events continue to unfold, we'll be talking more on this particular issue to get Nigerians abreast with what next to do. This is Business Express reaching you from Abuja. The program continues after this break.
Let me assure Nigerians that all COVID-19 intervention funds are safe in the Treasury single account, and that government is still open to donations in this regard. Government has opened special accounts with 5 commercial banks which are directly linked to the Treasury single account. Donated funds are safe in the Central Bank of Nigeria. For verifiable information about the funds and other financial obligations of the federal government, please contact us directly at the Federal Ministry of Finance, Budget and National Planning. The account details for the donations are as follows.
Moving on, profit-taking halts market recovery as the twin market gauges of the Nigerian Stock Exchange recorded decline in the week ended Friday, 24th April 2020. Let's join Bossede Abel for that weekly update.
The capital market for week ended 24th April 2020 nosedived as the NSE All-Share Index and market capitalization both depreciated by 1.41% to close the week at 22,599.38 basis points and 11.7 trillion naira. At a turnover of 1.1 billion shares worth 13.9 billion naira, in 20,591 deals were traded by investors on the floor of the exchange. All other indices finished lower, with the exception of NSE Insurance, NSE ASEM, NSE Merry Growth, and NSE Industrial Goods. The financial services industry led the activity chart with 965.5 million shares valued at 7.8 billion naira. The industrial goods industry followed with 54.8 million shares. The third place was the conglomerates industry with a turnover of 54.1 million shares. The top 3 equities for the week were FBN Holdings PLC, Guarantee Trust Bank PLC, and Zenith Bank PLC. They jointly accounted for 581.9 million shares worth 6.3 billion naira. A total of 313,523 units of exchange traded products (ETPs) valued at 3.9 million naira traded in 11 deals, as well as 4,243 units of federal government bonds. The price movement chart showed 25 equities appreciated in price during the week, 33 equities depreciated in price, while 105 equities remained unchanged.
Despite the weekly loss, stocks resumed positive in the Nigerian stock market as the market began on a positive footing. The NSE All-Share Index gained by 0.07% to close at 22,616.28 basis points, while market capitalization reached 11.7 trillion naira. Investors exchanged 108 million shares in 3,354 deals valued at 1.3 billion naira. Lasaco, Guarantee and UBA recorded the highest volume of traded shares, leading the most sought-after stocks. MTN Nigeria led the gainers for the day. Looking at the markets away from home, European stocks climbed on expectations of reopenings and central bank action. U.S. stock futures advanced with Asia also rising. Bossede Abel again brings us that report.
European markets traded higher Monday the 27th April as investors await central bank meetings this week that could decide further stimulus measures to reboot economies deeply damaged by the coronavirus pandemic. CAC topped 1.81%, DAX 2.42%, and FTSE 100 1.69%. Stocks in Asia rose as the Bank of Japan announced its decision to enhance monetary policy easing. Nikkei appreciated 2.71% to close at 19,783.22. Shanghai Composite 0.25%, and the Hang Seng Index also added 1.88%. Stocks future in the United States were higher in early trading. Dow Jones Industrial Average Futures were up 260 points. S&P 500 and Nasdaq futures also pointed to higher open for the two indices, while Africa's stocks traded mixed. Tunisia's Tunidex and Namibia's overall index posted gains, while the reds were Ghana's GSE Composite, South Africa's JSE Africa Top 40 and Nairobi's All Share.
Credits to the economy rose by 850 billion naira in February, with lending to government accounting for 84%, valued at 720 billion naira. This was the highlight of the Depository Corporation Survey for February, released by the Central Bank of Nigeria, CBN. It finds that credits to the private sector rose marginally by 130 billion naira, or 0.48%, to 26.7 trillion naira in February, from 26.57 trillion naira in January. Consequently, credits to the government accounted for 84% of the 850 billion naira increase in net domestic credit during the month, while credits to the private sector accounted for just 16%. The Nigerian Interbank Settlement System PLC, that is the NIBSS, has reported that 9.1 million bank verification numbers, BVN, are inactive in various banks nationwide as at December 31st, 2019. A report by the NIBSS indicates that out of the 40.4 million total BVN enrollments, only 31.3 million BVNs remained in the banks as at the end of last year. The report also showed that Nigerians abandoned 300,000 bank accounts in the first quarter of 2020. Number of current accounts operated by bank customers also declined by 1 million during the period. Quarter on quarter, the number of bank accounts rose by 15% to 143.19 million in the first quarter of 2020 from 124.85 million in the fourth quarter of 2019, and up year on year 120.92 million recorded in the first quarter of 2019. On that note, let's take a trip to the currency markets to see how the naira is faring alongside other major currencies. Oil prices not looking good at the commodities market as storage concerns rise. Let's see the figures. With that, we come to the end of this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now. Don't forget to use the hashtag, it's BizX. Remember to intermittently wash your hands with soap under running water as the world battles COVID-19. Be safe out there. Business Express returns on Wednesday. I am Benny Adams.